Hey all, good morning. Welcome to ShareTreck. Today is the 8th of May 2022, and let's get started with our daily update. Let's first start off with CRISPR news. I would like to show you a press release. This news article is about Imatics and Editas. What it basically says is that Imatics expanded a long-standing partnership with Bristol Myers Squibb to include new work on gamma delta cell therapies, which have shown early promise as possible alternative to CAR-T treatments sold by Novartis, Gilead, and Bristol Myers Squibb. To further this objective, Imatics entered into a deal with Editas, whereby Imatics will gain non-exclusive rights to Editas technology and intellectual property, which includes gene editing patents awarded to Broad Institute of MIT and Harvard. Financial terms were not yet disclosed, though Editas will get an upfront cash payment and potentially future payouts and royalties if the alliance leads to programs that progress. The article goes on further to clarify that unlike T cells used in Novartis, Gilead, and Bristol Myers Squibb's current treatments, gamma delta cells have elements of both innate and adaptive immunity, which would enable them to generate a broader response against cancers. These cells also seem to have key differences that make them less likely to trigger graft versus host disease, the GVHD, and it also gives them the potential to persist in the body for years and to recognize a range of targets. This is the gist of this entire article. I'm going to put this the link into the description so you can go and have a look at it. I would bet that this is going to improve the share price for Editas, and it's also going to improve the share price for Imatics. So basically, funds are coming from big pharma in this tough environment of high interest rates. So the show is going to go on. So that is the very first news article that we have. I always believe that the volume of shares that you trade is going to make sure whether you're going to succeed or fail in making a profit, given that the market is moving in the right direction and you have placed a proper call. What I mean by that is that if you're just going to buy 2 shares and you're expecting to make meaningful profit to grow your portfolio, that's not going to happen, because then you'll have to wait for a huge increase in price before you can make a marginal profit, because you have your trading costs that go into the price of your share. You pay commission while buying and you pay commission while selling. Those things take away a huge slice of most of your gains if you're just buying small number of shares. For me, I found the best solution is to deal in 1,000 shares. Therefore, we go into share prices which are slightly lower, and then try to have transactions of that size, so that not only can we have a good margin even with a minor change in the price, but also you can deal in options with a significant block that can give you meaningful profits. So with that said, it's the retail investors have flooded into the market in the last 5 to 6 years. And for retail investors, it's very difficult to put large sums of money at once and invest. Therefore, we had these companies like Robinhood coming into the picture. So companies like Robinhood, they aggregate all the orders from their buyers and then route them to a deal maker and process the transaction and make some money in the process. So what really happens in the market is that those of us who are retail investors, we get slightly delayed price action, whereas the big players know the on-the-spot action that's happening at the right time. And there are also so-called dark pools, which do trading in the stock market, which is not visible to us. And there are huge volumes traded in that. The government has decided now to do something about it. And that's the context of this next news article I'm going to show you. As always, the link is going to be in the description so that you can read it in detail. So the article is in CNN. It reads, the stock market could soon see a massive change on how it functions. So this article details how the government has been focused on making sure that retail investors get a fair shake. The government is planning to make changes as early as Wednesday, which happens to be today. We are going to get some regulation from SEC. And what that would do is it would create more competition in the back end, so that the trades can go at a much lower price, and aggregators who try to give you free trades and get your business are most likely to suffer the most, and therefore you should expect Robinhood's share to fall further today when the announcement becomes formal. So that's what I have to talk about with regard to this particular news article. You can check it out yourself. So let's look at the fear and greed index. So here we have the fear and greed index. We are at 33, which is similar to what we had yesterday. Way better than where we had been in the recent past in 8 and 9 and 12, which was extreme fear. So things are starting to improve a little bit, I would say. So here is the stock market heat map, yesterday's performance. So we can see Apple, Microsoft, Facebook, J&J, Tesla, all of these, most of these companies, everything has been in positive. The ones that suffered the most was Walmart and Amazon, as well as some agricultural stocks out here, MOS, the Mosaic company, small ones out there. But generally, overall, the market has been really good. And for us, especially in the biotech sector, we had a really good time overall because our genomic stocks did very, very well. That makes me feel happy because yesterday I had mentioned that the psychology of the market is such that the most beaten stocks in our genomic sectors are likely to be in green, and the ones that did well the day before were going to be gaining less and probably go into red. So we have something similar out there. We'll check it all out when we do our genomic share technical analysis. But overall, I think the market is still waiting for the consumer price index to happen and see where it goes. There is also a feeling out there that we are in the cusp of a recession. And this is because we already had a quarter of negative growth at the beginning of the year. And now we are looking at the results for the second quarter coming again negative. And that could mean that we are in a recession according to the traditional sense of the term. However, there is now a new definition that has been put into practice that says that it has to be a significant dip across all sectors. So that's going to be the new meaning of recession. We'll have to see how the market reacts to the second quarter GDP report whenever it comes, and we'll see where we go from there. But at this point of time, I think we are still bouncing at the bottom. The market will continue to have consolidation sideways. Some days will be up, some days will be down. We'll see what happens for today when we look at the index. Let's look at the Nasdaq futures first. The Nasdaq futures are a negative minus 0.11. At the same time, when I'm looking at CNBC out here, stocks making the biggest moves pre-market. So we have a whole slew of stocks which are going positive. Campbell's Soup up 3.7%, Thor Industries up 6.9%. Now Campbell is maintaining its outlook, and Campbell is a recession-proof stock. So I'm not surprised by that. The recreational vehicle maker stocks are 6.9% pre-market. This is about Thor Industries. So pre-market trading following better than expected quarterly results. Thor earned $6.32 per share, well above 4.77 consensus estimate amid strong demand for its products. Thor also said it's seeing signs of improved supply chain issues. This is not talking anything about future quarter. So it's very interesting to see the earning per share going up, getting it a 6.9% increase in pre-market trading. It's possible that the shares were beaten down severely with the expectation that there is a recession and discretionary spending is going to fall, and therefore there is the gain, but it's likely to lose some of the gains there. Moderna has added 1.6% in the pre-market as a modified version of its COVID-19 booster shot prompted a stronger immune response. So that's again another stock that's going positive. Western Digital is doing a split of its flash memory and disk drive business. So that's made the share jump 3.8% pre-market. Roku has rallied 8.1% because it's likely to be acquired by Netflix. Credit Suisse shares slumped 6.1% pre-market due to Russia-Ukraine war related negative outcomes for the business. Novavax went up 15.7% pre-market after it won an endorsement for its COVID-19 vaccine from FDA. DocuSign rallied 4.6%. That's a big relief for Cathie Woods after it announced that electronic signature company will have a global partnership with Microsoft. If I look at this overall status of the market out here, I think that there is a mixed message out here, even though our futures are saying negative, they are marginal. So there's a good chance that after market open, we might still continue to move up. Let's look at the indicators and see what is happening out there. I'm going to go for US oil first. US oil is continuing to respect this line of support. So US oil is positively in a bullish channel, and we are just shy of our all-time high of 127. All-time high is 129.81. Right now we are at 120.53. MACD is also bullish. Momentum is also above average and kicking up. So US oil is going to go up. When oil goes up, it's not great for the stock. So that is one bearish sign out here. And if I look at the put call ratio, we ended yesterday coming down to neutral. But for today, there's a good chance that we might be going into the bear territory. We don't know yet. Let us see what happens when the market opens. And if we look at the VIX, the live VIX, we can see there's a green candle out here at 24, just above the support. So yesterday we managed to pierce the support and fall down, but today we are back up again. So the VIX is indicating increase in volatility. Of course, it is still in yesterday's range, so there will be no dramatic moves. So I think overall the market is waiting to see what happens when the market opens. As always, the first hour is going to the amateur hour. 10:30 onwards, the market will show its true colors. So we have to watch out for that. Now I'm going to go and have a look at US dollar index. US dollar index is going up, which means that money is going to come back into US dollars. It will be taken away from the stock market. So that is again a bearish trend for us. Let us look at the 10-year yield. The yields are going up, but they are within yesterday's range, so it's not going to make much of a difference. So that's a wash as far as we are concerned. Now I want to go into QQQ and have a look at QQQ. QQQ has broken through this diagonal line that we have created, hoping to find a bullish track. So I'm going to move it around here, and we're going to look at what's going to happen today. Today, pre-market, we are down minus 0.20%, and minus 0.20 is a very small percentage. We are recording this at 8 o'clock in the morning, so we are way ahead of the market. Things can change between now and then. So I would still look at this diagonal line forming some kind of a support. We'll see what happens when the market opens. We still have got support from the 9-day and the 20-day exponential moving average. And right now we are at 309.28, which happens to be somewhere out here, exactly out here. So we are above there. So we are most likely to persist above this diagonal line of support. MACD is bullish and momentum is above average and picking up. So that is a good sign for QQQ. And if I was to look at S&P 500 and see what is happening out there, again, same issue with S&P 500. So I'm moving this line of support down here. The line of support doesn't become official until we got 3 touch points. So at this point of time, if I was to keep the line like this, we have 3 touch points. So this would seem to be official. Our pre-market action is negative, minus 0.22%, and we are sitting at 414.82, which is somewhere out here, just below the red line of resistance. So we have a good chance of staying above this diagonal line of support. We'll see what happens when the market opens, especially at around 10:30 in the morning. So that said, let's go and have a quick look at our gold and crypto and see what they are doing. As expected, gold has lost out because the money has gone out of gold and into US dollar index. And if we look at Bitcoin, Bitcoin is also negative. It has lost minus 2.96%. It's being supported by the 9-day exponential moving average, and also it has support at 28,993.1. MACD is bullish but tending towards the signal line. Momentum is telling us the true story that there's a falling enthusiasm level out here, and therefore Bitcoin is likely to lose. And in any case, Bitcoin is likely to be sympathetic to what is happening with Nasdaq. And given the US dollar index is going up, I suspect that Nasdaq is going to be negative today. There is a potential for a positive start, but later on it might get negative. The potential for the positive start is because so many of these companies are having positive movements in their share price, and there's only one negative out here, and that is Credit Suisse. And we already knew that Russia-Ukraine war was causing problems. It's just that they have formally mentioned that it's causing issues for their business. So that said, I think we got to move and have a look at the genomic stocks. Things are starting to get interesting in the genomic sector. So we have had a slate full of green results. So only PSCB lost some value. It lost 2% yesterday, but we have had overall green. So as market psychology would dictate, after a green day, you are supposed to expect a little bit of red to happen. So regardless of what happens with the overall market, there's a good chance that we're going to lose some of the gains that we made yesterday in a balancing act. Let's take the case of Bluebird, where we have been talking about swing trading opportunities. If the share price does come down anywhere close to 2.84, I think that, in my personal opinion, it would be an opportunity to buy so that you can reap some profit. Those who had bought somewhere around 2nd of June could have realized profit yesterday. If they didn't do that, probably today they won't be able to make as much profit because the price is likely to come down. We are still range bound between these two lines here. And at this point of time, we are closer to the top line rather than the bottom. So the risk of the price falling down is higher as compared to the risk of the price going up. However, if you look at the RSI out here, you can see that the momentum has spiked suddenly. And also the MACD has become absolutely bullish. Pre-market also, we are up 1.11%. So Bluebird is doing great. And if someone had bought Bluebird somewhere around 2.92, they would be making a killing at this point of time. Assuming you bought 1,000 Bluebird, you can calculate how much profit you would have made. It will be a very handsome amount of money for a single day. Now let's look at Allogene. It's up 17.6%. Pre-market, it is flat, and it's got resistance at 9.93, and pre-market it's at 9.49 and flat. So exactly where it ended yesterday. We have a floor support out here at 6.63, and our MACD is bullish, as well as momentum is spiked and it's looking upwards. The fact that pre-market trade is flat makes me a bit circumspect. Otherwise, because it had a maximum gain yesterday, there's a good chance that people are going to take profit. So any of these shares here, which are absolutely like 21, 17%, anywhere up to 6%, all of these are likely to experience some amount of profit taking, and therefore they'll feel some downward pressure after the market opens. The true action will come at 10:30. Now that said, let us go and have a look at IDNA. Now IDNA is showing us that the sector is basically still range bound. Yesterday we ended at 28.90 and we were constrained by the 20-day exponential moving average sitting at 28.88, and we ended at 28.84. And pre-market, there are no trades. MACD is bullish and momentum has sharply picked up as of yesterday. If the momentum continues, then we are going to break through the 20-day exponential moving average. Then our resistance is going to be 29.28. So we'll have to see what happens when the market opens. Right now, to be honest, I feel it's a mixed bag. Because when I look at the news from CNBC, which shows a whole lot of shares having handsome gains pre-market, and then I look at the futures being negative, and also QQQ pre-market trades being negative. Let us check it once again where QQQ is right now, because some time has passed. So it is still negative 0.35. Now 0.35 is not too much and it's not too less. So there is a chance that it can always go up from here. So I do not have a call for today, but one thing I can for sure let you know based on the market psychology is that the big gainers, like the ones which have somewhere between 21 to 6% of gain, those are likely to lose their gains unless there is some positive catalyst news for them. With that said, I would like to bring this session to a close. And if you like this video, please press a like out there. It helps YouTube show our content to many viewers and we get exposure. And if you have not yet subscribed, please subscribe. It's absolutely free and help us grow this channel. Thanks and have a great day. Bye for now.